Okay, in this class we discuss the theoretical aspects of marginal costing. Okay, in this class we discuss the theoretical aspects of marginal costing. Okay, what I mean by the marginal costing? The theoretical aspects of the marginal costing. Government of Karnataka, Department of Collegiate Education, Dr. S.V. Kabade, Assistant Professor of Commerce, Government First Grade College, Vijaypur 586101, mobile number 9986529073. Please give the like to this video and please subscribe, press the subscribe button, and also please share this video to your all friend circle. Write your suggestion, opinion in a comment box or a live chat. Okay, now see that what mean by the marginal costing. What is marginal costing? According to Chartered Institute of Management Accounting Association, marginal costing is the ascertainment of marginal costs and the effect of by profit of changes in a volume or type of output by differentiating between the fixed cost and variable cost is known as a marginal costing. Okay, what do you mean by the marginal costing? Marginal costing is the ascertainment of the marginal costs and of the effect by profit changes in a volume or type of output by differentiating the between fixed cost and variable cost is known as a marginal costing. Okay, I explain this what I mean by the marginal costing according to this definition. First you have to calculate the marginal cost and also you can measure what will be the effect on profit if there is any change in sales volume, if there is any change in the value in the volume of output, automatically it will be affected on profit. It will be affected on sales volume. Means if there is any change in a volume or sales volume, automatically it will be affected on a profit. Okay, to what extent the profit is differentiating? To what extent the profit is changed? Okay, to what extent the profit is changed due to changes in the sales volume, due to changes in the output, production. Okay, that is called as a marginal costing. Once again I explain this one. What is the effect of to what extent level the profit is changed due to changes in the sales volume or due to changes in the production volume? To what extent the profit is changed due to changes in the sales volume or due to changes in the production level? Okay, that is called as a marginal costing. In simple words, we can say that what we mean by the marginal costing? The marginal cost is the cost of by differentiating between the variable cost and fixed cost as per change in the volume of output. Means there are two types of cost. One is a variable cost and the second one is a fixed cost. Means the marginal cost is the cost by differentiating between variable cost and fixed cost. Okay, what you are getting? What you are getting the difference between the fixed cost and variable cost? Okay, what you are getting the differentiation cost between the fixed cost and variable cost as change in the volume of output. Okay, that is called as a marginal cost. Okay, I repeat, I try to simplify this sentence that the difference cost between variable cost and fixed cost as per change in the volume of output. The differentiating cost between variable cost and fixed cost as per change in the volume of output, that is called as a marginal costing. Next one. Okay, now see what are the features of the marginal costing. First one, same classification of cost. Already I told you, generally in the cost accounting, in management accounting, there are different types of cost. Historical cost, process cost, operating cost, sunk cost, notional cost, overhead. There are different classification of cost. But as per the marginal costing, there are only two classification of cost. One is the fixed cost and the second one is the variable cost. Take any industry, as per the marginal cost, the costs are classified into only two groups. The first one is variable cost and the second one is the fixed cost. Take the service center or take the manufacturing center, generally the costs are classified into two classification. The costs are made two classification of cost. What are those? Fixed cost and variable cost. There are only two classification of cost in marginal costing. This is the main feature of the marginal costing. Means fixed cost and variable cost. Next one, profit depends on contribution. The second feature of marginal costing. In marginal costing, profit depends on contribution. If there is any change in sales value, if there is any change in the variable cost, automatically there will be change in the profit. It leads changes in the profit. Means the profit will be changed due to changes in the value of contribution. As means in terms of variable cost and sales. If there is a change in selling price or variable cost, automatically it will be changed on a profit. Means generally in marginal costing, the profit depends only on contribution. Okay? Is there any change? If there is any change in the contribution, such as selling price or sales amount, or variable cost per unit or total variable cost. If there is any change in the variable cost or sales cost, selling price, automatically the profit is changed. That's why the profit depends on contribution. Next one, the PV ratio is integral part. The most important ratio, the most important marginal costing equation is PV ratio. The most important marginal costing equation is PV ratio. If the PV ratio is changed, automatically all factors of profit activities automatically will be changed. If the PV ratio is changed, automatically it will be effect on profit, on earning per share, whatever it may be. Profit before tax or profit after tax, or profit after transferring the general reserve, whatever it may be. Generally, the PV ratio is a main important equation in a marginal costing. PV ratio is an integral part of the marginal costing. Next one, profit after marginal costing and fixed cost. Okay. What we will get, generally the profit is arrived after contribution and fixed cost. What we are deducting the fixed cost out of contribution, then we will get the profit. What I mean by this one? Future, first how to calculate the contribution. Okay, how do you calculate the contribution? Sales minus variable cost, then we will get the contribution. That is the marginal cost. Okay, out of contribution, then how to deduct the fixed cost. Okay, when you deduct the fixed cost out of the contribution, then you will get the profit. Next one, the valuation of work in progress and finished goods stock is based on marginal costing. Okay, in all industry, generally the valuation of work in progress, the valuation of finished goods is based on marginal costing. Means the valuation of the calculation of stock for work in progress and finished goods stock Okay, generally it is based on a marginal costing. Next one, impact study for forecasting. Okay, in the previous class we discussed some problems. We can forecast the sales for the coming year. We can estimate the sales for the next year. In the marginal costing, it is only possible. Okay, in marginal costing, it is only possible the forecasting sales can be made. Means we can estimate the profit, we can estimate the sales, we can estimate the contribution, whatever it may be. We can estimate the earning per share in only marginal costing. Means if there is any change in the selling price of the product, automatically it changes the profit factor. If there is any change in the variable cost, automatically it affects on profit factors. Okay, means we can study the impact study of the forecasting in marginal costing. Okay, it is also one of the main feature of the marginal costing. Okay, what are those features of marginal costing? First one, same classification of cost, means a fixed cost and a variable cost. There are only two classification of cost in a marginal costing, fixed cost and variable cost. Second one, profit depends on contribution. Means, okay, how do you get the contribution? You deduct the variable cost out of sales. Okay, then you will get the contribution. Means, is there any change in contribution? Automatically the profit is changed. The third feature, the PV ratio is integral part. It is a main important marginal costing equation. Next one, profit after marginal cost and fixed cost. Okay, you can get the profit after deducting only variable cost and fixed cost out of sales. Then you will get the profit. There is a fixed procedure in marginal costing. What is that? When you deduct the variable cost out of sales, then you will get the contribution. In the contribution, when you deduct the fixed cost, then you will get the profit. Next one, the closing stock, the stock valuation for work in progress, the stock valuation for finishing goods is based on marginal costing. Next one, we can estimate the sales, we can forecast the sales or profit for the coming years. Okay, now, what are the merits of marginal costing? First one, it helps for cost control. It helps for cost control. Means we can control the cost. Okay, generally the fixed cost can be controlled. Even sometimes you can control the variable cost. Okay, when you control the variable cost and fixed cost, automatically it helps the company to increase the profit. Okay, to reduce the it helps the company to reduce the cost and also it motivates the company to increase the profit. This is also one of the merit of the marginal costing. Next one, the marginal costing is very simple. There is no difficulty. There are no difficulties in marginal costing calculation. It is very simple. Next one, it helps in managerial decision. It helps in managerial decision, means by calculating the PV ratio, we can decide, okay, what will be the break-even point level, at which point of the sales there is no profit, no loss. Okay, exceeding the BEP, definitely get the profit. Okay, when the sales exceeds the BEP point, automatically the company get the profit. Okay, when the BEP means when sales exceeds the BEP point, automatically the company gets the profit. Means for managerial decisions, the marginal costing is very helpful. Next one, it is said to profit planning. Means when the company wants to increase the profit or motivating the profit. Okay, when the company wants to make a plan for profit making, means the marginal costing is very important. Means by calculating the break-even point, margin of safety, PV ratio and contribution ratio. Okay, these are very important for the marginal costing. Next one, it is a realistic stock valuation. Means generally in marginal costing the stocks are valued on the basis of the marginal costing. Means the stock of work in progress and the stock of finished goods are based on a marginal costing. It is a realistic stock valuation. Okay, these are the merits of marginal costing. It is a realistic stock valuation. It is a said to profit planning. It is a helps in managerial decisions. It is a simple. It helps for cost control. Now see what are the demerits of marginal costing. First one, it is improper basis for pricing. Means to fix the price on product or service, the marginal costing is not most suitable. The marginal costing is not useful for fixing the price because the fixing the price on product is not in our hand. The fixing the price on product is not in the hands of the company. Means generally fixing the price depends on different criteria. You have to see that what are the market conditions, supply factors, demand factors, production factor, and consumer wants factor, and technological factors, political factors, health factors. There are different circumstances to fix the price. Means by using the marginal costing, it is not suitable to fix the price on a product. The marginal costing is not suitable for fixing the price on product. It is a improper basis. Second one, it ignores the time factor. In a marginal costing, it don't means generally there is no calculation of the time factor. We cannot take the time factor. Okay, for which year the profit will be increased, in which year the profit was decreased or increased. There is no time factor in marginal costing. That's why the marginal costing ignores the time factor. Next one, it is difficult for cost classification. Generally, there are different classification of cost. Direct cost, indirect cost, in direct cost, direct material, direct expenses, and direct labor, and sunk cost, historical cost, process cost, operating cost, notional cost. Okay, there are different classification of cost, but in case of the marginal costing, there are only two classification of cost. One is a fixed cost, another one is a variable cost. It is very difficult to make a classification into only two groups. One is a variable cost and another one is a fixed cost. It is not possible to take only in two categories of in a two classification of cost. First one, difficulties for industry where larger stocks. Okay, large volume of stocks are in the organization, where the larger volume of stock is there in organization. It is very difficult to understand industry to apply the marginal costing. Application of marginal costing is very difficult for industry. Means the industries who are engaged in larger stocks. Next one, less effective in capital intensive industries. when the companies are formed with a capital purpose. When the companies are started, with capital motivated factors, it is very less effective marginal costing. Okay, these are the demerits of marginal costing. What are those? First one, it is improper basis for pricing. Second one, it ignores the time factor. It is difficult for cost classification. Next one, difficulties for industries where large stocks. Next one, less effective in capital intensive industry. Now, discuss the classification of cost. There are two classification of cost. First one is a fixed cost. Second one is a variable cost. There are two classification of cost. First one is a fixed cost. Second one is a variable cost. There are two classification of cost in the marginal costing. One is a fixed cost. Second one is a variable cost. Next one. Now we discuss what I mean by the fixed cost. Define fixed cost as a cost which does not change by the variation in the value of output. What I mean by this one? The cost which is constant irrespective level of irrespective changes in the sales volume, irrespective changes in output, production, there is no change in the cost. That cost is called a fixed cost. Means the cost which is not affected, the cost which is not changed according to the sales volume, according to the production value. The cost which is constant according to the sales value, according to the production value. If there is a change, if there is a decrease or increase in the sales volume, but the cost is fixed. If there is any increase or decrease in the cost, but the cost is fixed. If there is any change in, if there is a decrease in sales value, if there is a increase or decrease in the sales value, but the cost is fixed, that cost is called a fixed cost. Okay, now see that what are the examples? Rent, rates of factory building, interest on capital, insurance of building, etc. Okay, what are the examples of fixed cost? Rent, rates of factory building, interest on capital, insurance of building, etc. Okay, these are the examples of fixed cost. Okay, now what are the features of fixed cost? First one, they remain constant from one period to another except when they are deliberately changed. Generally, the fixed cost is constant from 1 year to another year. There is no change in cost. Okay, the rent of the factory building, there is no change in the next year. There was also no change in the previous year. Means they remain constant. Okay. Next one. Fixed overhead per unit of output are not fixed. As output increases, fixed overhead per unit declines and vice versa. Okay, what I mean by this future? The fixed cost in total is constant. Fixed cost in total is constant, but fixed cost per unit is changed. If the production or sales value is increased, automatically the fixed cost per unit is decreased. If the sales volume or production volume is decreased, the fixed cost per unit is increased. That's why means the fixed cost in total is constant, but the fixed cost per unit is changed. Please keep in your mind. Fixed cost in total, which is constant, but the fixed cost per unit or per activity is changed. Last one, variable cost. Okay, what do you mean by variable cost? The cost which is changed according to level of production capacity level is called variable cost. The cost which is changed according to the level of production capacity, okay, that is called as a variable cost. What do you mean by the variable cost? The cost which is changed according to the changes in the sales value, according to the changes in production value, automatically the cost is changed. Okay, that cost is called as a variable cost. Okay, now what are the examples? Consumable stores, repairs, maintenance, and depreciation based on asset usage. Consumable stores, repairs and maintenance, and depreciation based on asset usage. Okay, these are the examples. Okay, what are the features of the variable cost? First one, variable expenses per unit are regarded as constant. Variable cost per unit is constant. What is the meaning of this feature? The variable cost per unit is constant. Variable cost per unit is constant, but the total variable cost is changed according to the level of production. Okay, once again, I tried to simplify this variable cost. The main two features of the variable cost, one is the variable cost per unit. The variable cost per unit is constant. The variable cost in total is changed. Once again I repeat it. Variable cost per unit is constant. Variable cost in total is changed. But in case of fixed cost per unit is changed, but fixed cost in total is constant. Fixed cost in total is constant, fixed cost per unit is changed. But in case of variable cost per unit is constant, but the variable cost in total is changed. These are the main features of the fixed cost and variable cost. Okay, thank you for watching this video.